Welcome back to Market on Close. I am Sam Barnes alongside Marley Caden over in Chicago. Shares of Nvidia touching a record high today after the company announced an infrastructure partnership with OpenAI and will invest $100 billion in the company to build out data centers. Joining us now to talk about the deal is Caleb Silver, Editor-in-Chief at Investopedia. Nice to see you, Caleb. So talk us through the significance and some of your takeaways we've initially got from the details about this deal.
Yeah, well, this is all about power, especially computing power, because computing power is the foundation for building out AI, Gen AI, agentic AI. Everything based on AI needs more computing power, and NVIDIA knows that. So this is a $100 billion investment with OpenAI to build out that computing power, basically in scales, right? $10 billion per gigawatt produced, and it's a massive investment. But don't forget, NVIDIA and OpenAI, they've been doing business together for quite a while, about 10 years, and they've done very well by each other. Basically, these companies are building on partnerships that they've already established, and OpenAI, of course, has the big partnership and the investment for Microsoft, Oracle, SoftBank, and Stargate, and NVIDIA was one of the early funders of it, so this expands its capacity.
And Caleb, this is an ambitious undertaking for both of the companies. So I suppose it begs the question, is it actually possible? I mean, to use Jensen Huang's own words, it's monumental in size.
Yeah, monumental in size, but it's just really the beginning of the Superscale Buildout. We're probably in the second or third inning, depending who you're talking to, and we're going to need a lot more power if AI is going to fulfill the promise that's been put out there by industry and the one that keeps evolving over time. So it's a massive undertaking. It's going to require a massive infrastructure build, but without it, you can't have the scale of computing power you need to deliver on what AI is supposed to deliver over the next decade or 2 decades. So that's a big part of it right now. And when you think about what we need in terms of power, gigawatts are the biggest the metric of electricity we have here. We're going to need hundreds of gigawatts, and we're talking about here now 10 gigawatts here. So this is just the beginning of a lot of build out. I expect a lot more announcements like this in the future, but it's actually necessary for these companies to be able to scale.
Yeah, but Caleb, I mean, is there enough energy really to power these ambitions? I mean, is this going to be a sort of a constraint for some of these companies that are partnering up and doing this? I mean, every day it seems like we hear about some sort of new energy deal, whether it's, nuclear or whatever else it is. And certainly that has become a big theme. But no doubt Jensen Huang and co have talked about the risks of, perhaps a lack of infrastructure too.
Yeah, if you go to any AI conference right now, that's what they're talking about as well. We need all this power, but where is it going to come from ultimately? Which is one of the reasons we've seen power stocks, especially last year, enjoy that nice little rally. And last week, the nuclear stock rally was something to behold as well, because we're going to need a lot more of that build out as well. We're going to need a lot more power to power AI, and it's going to run through these companies. But Sam Altman said it himself in today's press release with this announcement saying, you're going to need to have compute infrastructure is the way they call it. And compute infrastructure is going to have to scale tenfold. And for these big superscalers and the builders, the NVIDIAs of the world that are making the chips for these data centers, the Microsofts that are hosting this, and Azure and some of the cloud computing companies out there, they know that they're going to need to scale as much as possible, which is why they're not afraid to spend as much on CapEx as they have been spending. And they have been spending tens of billions of dollars on CapEx, much more than they're recouping in terms of revenue and productivity at this point in the AI cycle. But the hope is that that eventually catches up. They'll spend less on the build out and start reaping the rewards of it in the next 3 to 5 years. And that's what investors have been putting their money behind.
And Caleb, as we continue to have these conversations about these data center build outs and the massive investments that are going in, I mean, it really is speculative spending at this point. We know there's a need, but there isn't an actual demand. There aren't actual customers yet. So this AI bubble concept keeps coming up. What are your thoughts about the AI bubble as it relates to data center build outs?
Yeah, great question. I was speaking to Dan Niles about this earlier today, who's been watching this very carefully. And he's saying basically, like a lot of other smart analysts, you can't not build out if you are going to play in this game in the next 5 to 10 years. And there's only going to be 3 to 5 companies that are going to be able to afford to scale at this rate because they have cash flow from other parts of their businesses. Microsoft actually has the Office set of products and software that they sell. Alphabet has YouTube and the other ways that it monetizes through search. Meta has tons of ways of making money off of us, whether it's advertising or in other ways. So they can afford to spend out while they're still proving the concept that this is actually going to pay off down the road. Not every company is going to be able to make it. The beneficiary front and center has been Nvidia. As I've said, they've been in business with OpenAI trying to build out this computing infrastructure for over a decade now. Now they're making a massive bet in the form of $100 billion over ever how many years it takes to build this out. They think the first gigawatt's going to be built out within the first 6 to 12 months, and then maybe get quicker from that point on, and maybe we'll start to see some actual results from this spend.
You know, it was interesting, wasn't it, Caleb? Because it was actually Sam Altman who sort of warned about a bubble more recently. And I suppose we all wish we were a sort of fly on the wall last week in Windsor Castle when these two guys were sitting down, whining and dining with the president and also British royalty. But I'm just wondering, you know, I suppose you've sort of explained the move behind Nvidia today because of the fact that, you know, no doubt investors see value in this deal. But I'm just wondering, you know, for those who perhaps have missed the boat on, you know, names like Nvidia. I mean, how do you approach this trade? How do you look at this as we see these sort of eye-watering figures being thrown out there by these big companies? How do you approach this right now?
Great question. When you think about today, 2025, and the big spend here on the valuations, the stretch PE ratios, the stretch price to sales ratios, you can't help but think back to 1999 and the internet bubble build-out, when the superscalers were companies like Cisco that were actually providing the equipment, right, to make the internet possible. Well, that's where NVIDIA is today. And while it may be very highly priced and at all-time highs, you could have said that 2 years ago, 5 years ago, 10 years ago. Just put this stat in your mind for just a second. OpenAI came out to the public. OpenAI was released commercially to the public in November of 2022. NVIDIA stock is up 935% since then. So it has been the right play all along in this build out. And you have to ask yourself as an investor, is it going to be here in 3 to 5 years as still one of the major dominant companies supplying the infrastructure and the chips for this build out that's going to continue for the next decade at least? I think the answer is yes. So while we may get a pullback at some point and a sell-off at some point, right now it is the main stock to play at this point in time, as well as Alphabet, as well as Microsoft, as well as Meta when it comes to AI. They're actually winning. Apple hasn't even really begun to fight in this capacity yet. The iPhone 17 may change that. So these names are expensive. They're expensive for a reason. They're the biggest stocks in the world, and they are the leaders of the pack in terms of driving the AI revolution.
You know, and some say utilities, energy is a way to play it as well, because, you know, as we said before, I mean, something's got to power it, hasn't it, Caleb? Thank you so much. Always a pleasure to have you on the show. Caleb Silver from Investopedia.